Welcome back, traders. It's Whelms, your favorite Forex trainer. Welcome to another exciting training. I do this pretty much once a week on my channel. So if you haven't subscribed to the channel, please do so and hit the bell button. That way you get notifications when I do put up a training on my video with regards to teaching you guys how to become profitable and successful Forex traders. I myself am a full-time day trader, and I'm also learning just like everyone else. There's always something new that you can actually incorporate into your trading plan when you watch YouTube videos or hire other mentors to instruct you on how to become a successful Forex trader. I also encourage you to be part of the Academy. The Academy link I'll showcase and show you exactly how you can sign up for the Academy and be part of the Academy. That way you get 24 access to instructors, live training sessions, videos, things of that nature inside of the Academy. That's going to help you pretty much sharpen your skills as well. So in this video, what I want to do is go ahead and showcase to you a couple of great things that I think that's going to warrant your attention. If you are a trader and you trade funded accounts, you might want to try ForeTraders. ForeTraders is having a phenomenal promotion right now where you can actually get a $100,000 account by using NASDAQ, by using the code that you see here, NASDAQ. They're having a buy one, get one, whereby once you pass your trading account, you get another 100K account right after that. So that's exciting in itself. So I went ahead and took advantage of that. So I'll be showcasing and sharing with you my 100K trading account funded challenge that I've actually paid for with funded traders. So stay tuned for that. I'll be giving you guys updates. Letting you know how I'm doing with that account. So basically, the way to get that account, I'm going to show you how to do that right now. If you go to my website, make this a little smaller. If you go to my website, metroforextraders.com, you come across my page. There'll be a link in the description as well that way you can click on it and go directly to this website, and you'll scroll down and you're going to click on Funded Challenge number 2. So once you click on that, it'll take you to this particular site here. And what you want to do is click on 100K challenge, okay? And make sure it's a one-step challenge, because the discount does apply to the one-step challenge. And then let's go all the way down. And you can get these discounts if you want, but that's up to you. Then right down here, you're going to go ahead and click agree to the terms and conditions after you've read the terms and conditions, of course. And then you'll see my code here, which will give you 15% off. But if you want the 20% off, what you're going to do is go ahead and put in that code that you saw on the previous slide, which is NAS, NASDAQ, NAQ. I believe that's what it is. Let's go back to that page. Okay, so there it is. Okay, so once you type in NASDAQ, you get 20% off, and it drops the price down. That way you can actually get a 100K challenge. And in this video, I'm going to show you my trading strategy, and showcase and share that with you guys on this video to show you how I'm going to pass this phase, which is a one-phase challenge. You do have a couple of parameters that you have to hit before you actually get a live actual funded account, 100K account, and that's basically you have to get profit of about 9% profit in order to pass it. Okay, I went ahead and got the discount, so my instead of $9,000, I got the $53 off, which is now my profit target is 11%, which is a little bit higher, so it's $11,000. And then I went ahead and got the 70% profit split, which is another savings of $26. So it's a 70-30 split. So once I get and pass the actual live account or the challenge account, I now will be able to profit split with ForeTraders a 70-30 split. Well, I'll be able to keep 70% of the profits that I make in my account, and they keep 30%. Now they actually pay out every other week, so twice a month you can get paid and submit a withdrawal request once you earn enough profit, which would allow you to get to a point where you can actually request a withdrawal. Okay, so if you're with me and if you want to start your own challenge, you can go ahead and click on the link in my description and go ahead and get yourself a 100K challenge. Okay, now let's talk about my trading plan. My trading plan is this right here. Okay, so this is what I'm going to be using to help me pass my trading account. This is my professional forex trading plan. Core strategy, market structure, and liquidity, and entry levels. Primary focus is only trade high probability A1 setups. Number one, basically we're going to do a top-down analysis. So we're going to do a top-down market analysis. Step one, start on a daily time frame. So I'm going to read the whole thing through, and then we'll jump onto the charts so I can show you exactly how to mark up your charts based on my trading strategy. Now, you don't have to necessarily accept the whole thing. You can tailor it to your needs. If you already have a trading strategy, you can actually change this up and include some of the things you think that will benefit you in your trading strategy. But if you want to use this trading strategy, I'm giving it to you absolutely free on my channel because you are a subscriber. And if you haven't already subscribed to the channel, go ahead and hit the bell button. And thank you to everyone who's already subscribed to the channel already. So let's dive in. Okay. So step one, start on the daily time frame. So the objective, identify the overall market structure and directional bias. So you're going to ask yourself a couple of questions. Number one, is the market in an uptrend, making higher highs, higher lows? Is the market a downtrend, making lower lows, lower highs, lower lows? Is the market ranging sideways or consolidation zones? So these are the questions you want to ask yourself once you're on the daily time frame. This defines your directional bias and sets the context. Okay. Then we go to step two. Drop to a 4-hour time frame. You're going to analyze for breaks of structure, which is BOS, and or shifts in the market, SMS. Determine if there's a change in trend or confirmation of a current trend. Look for market structure breaks that align with higher time frames, time frame biases. You trade in the direction of the new structure only when confirmed with the BOS, break of structure. 2. Key trade setup components. A. Identify the origin. Pinpoint the last demand/support zone or order block from which price impulsively moves. The origin of displacement. Mark it as a potential entry zone. B. Locate liquidity pools. Look for equal highs, lows, trend lines, liquidity, or obvious retail stop zones. Price should ideally sweep liquidity before moving into your setup area. FVG/OB. Okay, FVG is fair value gaps. OB is order block. C. Imbalance or fair value gap. Okay, identify areas where price moves too fast, creating imbalances. Look to enter on a retracement into a fair value gap or an order block that aligns with the structure. Entry confirmation comes when price sweeps liquidity and trades into the fair value gap order block aligned with trend. Number 3, entry execution. Enter trades at or within a fair value gap or order block or imbalance zones after liquidity is swept. Wait for price reaction or confirmation candle before enter if needed. 4, risk management. Most important aspect of the whole trading plan is your risk management. So risk to reward, target a minimum of 3 to 1 RR on all trades. Stop loss. Always, always, always use a hard stop. Set it below the order block or fair value gap for longs and above for shorts. And sell range anywhere from 15 to 25 pips. Your stop loss range should be anywhere from 15 to 25 pips, depending on the volatility and time frame. Position size should align with your risk percentage per trade. You should only risk anywhere from 1 to 2% on any given trade. Definition for reference. Okay, you can go ahead and pause the video and read what is a fair value gap and what is an order block, because I'm going to be referring to those areas to place orders and to place entries. Alright, so final checklist before placing the trade. Number 1, daily bias alignment. Number 2, H4, which is the 4-hour time session. Break of structure or shift confirmation. Liquidity sweeps, entry at FVG or OB or imbalance. Risk your reward 3 to 1. Stop loss properly placed, and always check news events, which is really important, because you don't want to get into a trade and all of a sudden, bad news causes your trade to go the opposite direction. Good news makes the trade go up. Bad news makes the trade go down. So depending on your entry, you want to make sure you know what's going on in any particular pair, if there's any news that's going to be coming out before you actually place that trade. Alright, and that's part of the fundamental analysis of things. Now let's jump into the charts and go ahead and discuss the technical analysis of things, hence why I read you my trading plan. So let's go ahead and mark up the charts based on my trading plan. Alright, so this is gold. Gold has been actively ripping lately on the upside, because everybody feels that gold is a safe haven. So a lot of people, whether it's banks, institutions, individual retail traders, are trading gold either as a hedge to inflation, or an opportunity to buy and hold for long-term gains. So when looking at the chart, we want to determine the very first thing that was on my trading plan. So let's go back to the trading plan and let me reread that to you, and then we'll mark up the chart according to the trading plan. So number 1, we're going to do a top-down analysis, right? We're going to start with the daily time frame. So what we're going to ask ourselves during the daily time frame is whether the market is in an uptrend or a downtrend. So looking left, we notice that the market was consolidating at this particular area here and just going sideways. But eventually there was a breakout, okay, right here. And that breakout has caused the market to be trending upward. So we're going to take our trend line, we're going to take it from the breakout all the way up. We're going to mark our trend line and allow the actual base, right, which is could come out from the box, but I normally put it right outside the box, and allow the base of these candles to hit the trend line as close as you can, at least 2 touches, okay, or 3 touches from this base here. The wick is touching the base of the trend line, which is telling me that this whole session here was an uptrend. Then the market retraced a pullback at this particular level here and started trending lower. Okay. Now, when you look at this overall, you'll say to yourself, okay, the actual trend actually reversed right here, which caused the market to trend lower. Okay, but then what happened was, when this pullback happened, it actually broke structure to the left. Okay, because at this particular level right here, Okay, this particular level right here. If the market at any point went below this level, you had a change in structure. Okay, but what happened was the change in structure, the change in the market structure, actually reversed and started trending back towards making, higher highs over here. So it was no longer downtrend right here because it actually reversed because it went higher than this area right here. Okay, so market structure shift was actually held right here as well. So whenever there's a break in structure, the market tends to go in that direction. Okay, so here you can see the market is actually breaking out of that area right here. So it's no longer in a downtrend, it's now in an uptrend. Okay, so market is trending higher. Okay, so that's what we're gonna, that's the first thing you ask yourself. What trend is the market in? Is the market in a downtrend or an uptrend? According to this, the market's in an uptrend. Okay, now we're gonna go down to the 4 hour. Okay, and in the 4 hour, okay, you'll notice, yes, the market is trending higher. So what do? We analyze we drop down to the 4 hour and we analyze for breaks of structure or a shift in market structure, which we already did. We realized the market shifted and it started to go back up. Now you're going to determine if there's a change in trend or a confirmation of a current trend. There was a change in trend because it was going down and then it changed based on that market structure shift. Now look for market structure breaks that aligns with higher time frames, okay, which we also took a look at. If we go back to the chart, we notice that the market had a market structure shift right here. So we can actually make this a little tighter and do this, okay, and we can actually take off this line because the market's not in a downtrend, it's actually in an uptrend. Okay, it's because it passed this trend line that we had set up here. So as we move down to the lower time frames, what we want to do is only take buys. We want to find a way to get into the market for a buy. Buys meaning we're going up with the trend because we're following the trend. Okay, sales, we're not looking for sales. Usually sales is down, taking sales down to these levels down here. So we're looking for buys throughout this whole session. Okay, so we're going to drop down to the 1 hour and see if there's an opportunity to get into the market, number one. But we also want to set our, go back to the trading plan. We want to also set the origin, okay, key points and components. Identify the origin. Pinpoint the last demand in or supply area or order block from which price impulsively moved. Okay, so let's look for that on the 1 hour. Okay, so we're going to look for that in the 1 hour. Okay, so we notice that market did shift, and we're going to go down to the bottom where is actually where resistance support is, because resistance is on top, so you can mark that. But we're also going to look for supply and demand zones. So a demand zone is the last low before an impulse. So this is towards the impulse right here, okay, that shot up, that caused it to go back into an uptrend. So we're going to mark our demand zone with this red candle here and stretch it all the way out to the right. Okay, and then we're going to mark our supply zone, which is the top candle, green candle, and stretch it out to the right. Okay, so the market is within this supply and demand zones. So what we do, we buy in this area, which is the demand zone, we sell in the supply zones. But remember, by knowing that the market is in an uptrend, we only look at for buys because we don't know how far the market's going to retrace, okay, for you to actually get into a sell order. So we wait for retracement to get into a buy, because we're going to buy on dips, okay? Only buy on dips, okay? So right here, the market also was in a consolidation zone, okay? We mark that out. This was a consolidated area because the market only went sideways during this trending session. And then there's a breakout with this huge green candle that broke out of that session, causing the market to go higher. But during this time, the market created what we call an efficiency, or an area where a lot of orders were left behind. Okay, and typically when there's 3 consecutive candles and a middle candle that's larger than the first 2 candles, the left candle and the right candle, and the wicks, if you take a closer look at the wick of this candle, take a look at this candle's wick, and you take a look at this candle's wick right here, you notice that those 2 wicks did not meet or did not touch because of this green candle. Okay, it created a market where it wasn't able to fill all the orders. So there's a gap between this candle and this candle. So at some point in time, the market's got to come back and fill this gap, okay, in order to create higher highs, okay? Or if you look at this wick and this wick, because there's a candle right here, those 2 wicks did not touch either, creating another gap right here. So we're going to mark out those fair value gaps. So that's what we call them fair value gaps. So right here, and right here, right at the bottom of this candle's wick and the top of this candle's wick is where we're going to put our fair value gap. And we're going to color it. Okay. So we also have another gap right here that also has to be filled. And as you can see, if we open this up, the market did come into this area, so therefore it's filling the gap. It doesn't necessarily have to fill the entire gap, but if a wick comes into the gap, it's actually filling the gap. Okay, so, and then we have this candle right here that almost looks and resembles a doji candle, which means the market is trying to tell us something, right? What is it telling us? It's telling us that the market wants to go higher, wants to go right back up, because with any type of doji, okay, dojis mean reversal. And since we see red candles trending lower, and then you see a doji candle, we want to anticipate the market to change directions and go back up to make higher highs. So now, if we know this, we need to be patient, because the market also needs to fill this gap. Okay, so whether or not it's going to fill it now, we don't know. All we know is that the market is right here, and we need to go to the lower time frames to see, is there an opportunity to get into the market at or after this particular candle, right? So we're going to go down to the 30-minute and take a look at market structure to see what's going on. See, as you can see, the market's going right. Now, that means it's in a consolidated area, which means the market is indecisive and it doesn't know exactly which direction it wants to go to. Okay, so never ever trade in a consolidated area, because you'll be trapped. That's where a lot of people get trapped. So at all costs, try to avoid being inside of a consolidated area. Okay, let the market do what it does, and then wait for a breakout. Now, there's a concept that we call accumulation, manipulation, then distribution. So basically, the market is accumulating orders. At one point, it's going to pop out in one direction, which would be the manipulated direction, and then it reverses in distribution. It'll distribute going in the opposite direction. So we have to anticipate that as well. So we're going to continue to go down to our lower time frames, and as we go lower and lower, we'll notice that the market's not making a higher high, and the market's not making a lower low. So we need to be patient and wait for the market to actually come out of this consolidated zone, which I'm going to now change the color to purple. Okay, we can also adjust our support area, well, our supply zone, I should say. Adjust our supply zone because it's this green candle with the red candle on top. So remember, you sell in supply, you buy on demand. So demand is way down here, right? So we're going to adjust that because it's way down here. Okay. And we try not to trade within supply and demand zones, because the opportunity to make money is, of course, is always on the bottom and then heading up to the top, or from the top heading all the way down to the bottom. Okay, so the old adage is you buy low, sell high. Okay, but the great thing about Forex is that you can actually sell high and profit when it goes down lower down to this demand zone. Okay, but I don't know if you notice, there's also some fair value gaps within the 15-minute time zone as well that we can also mark out. Okay, now we don't have to, but it's always good to see a visual to see where are these fair value gaps as well. So what did I say the fair value gaps were? Were the gaps between the wicks and the candles. So that's one right there. We stretch it out. This wick and this wick is not touching, so we switch this one out. Okay. And if you want to find these fair value gaps a lot quicker without you doing any manual labor, you can also go to an indicator and look up the indicator that says fair value gap by Lux Algo. By clicking there, it'll plot out all your fair value gaps for you. Okay, and look, I missed one. So let's go ahead and mark this fair value gap right here. So the green area is all of your fair value gaps. Okay, and there's a fair value gap up here for the red. For those who are actually selling the market, there's a fair value gap on top as well. But we're not focusing on sales, we're actually focused on buys. So what we need to do is wait for the market to hit one of these fair value gaps, and that's where you would actually place your order going up, right? Because we're looking for buys, we're not looking for sales, we're actually looking for buys. Okay, so if you were to mark out your strategy on the 15-minute time zone, you would actually take your long position and place it in the middle of this fair value gap right here. Stretch it out for a 1 to 3. Okay, that's our risk to reward. It's going to be right there. Actually, it's going to be a little bit lower than this candle right here. And we're going to go 1 to 3. Alright, so right there. Okay, so that's where I would wait for the market to come to. If the market actually comes down in this particular area, I would go ahead and place my order and ride the market back up towards the supply zone, so that way you have a 1 to 3 like so right there. All right, so that's the strategy in a nutshell. So basically, you're going to set your stop loss below the red area. You're going to take profit on the top, and you wait for the market to hit your levels. Now, as we speak, the market just opened up. As you can see, it's actually trending higher here. So therefore, we need to wait for the market to come back down this area. And if it ever does, we'll be ready to put in our order. Okay, so you can set a buy limit order, okay, and then set it and forget it at that particular point. Or you can watch the market and wait for it to come all the way down here and place a market order. it's up to you. But we're only looking for buys to ride it back up for 1 to 3. And that's my strategy in a nutshell. So basically, you can rewind the video and review everything, take copious notes. If you got questions, you can write it down in the comments area. But with that being said, I'm going to go ahead and encourage you to follow me on this channel. And I'll be coming back with updates on how I'm progressing with my 100K challenge as well. So that way you guys can see how I'm actually using my trading strategy to help me pass the challenge. It's only one phase. Once I get to $11,000 in profit, I pass the challenge, and then I actually get an actual real challenge, and then I have that opportunity to now split the profits with the company 70-30. Well, I'll keep 70% of the profits, and the company will make 30% of the profits going forward. So with that being said, hopefully you guys got some value out of this video. Thank you for watching, and much success to you all. Bye bye for now.